Okay, let's get into it. So what we're going to talk about today is we're going to do like a wrap up of all the particular content over the three classes. And so what we're going to try to show you is that if you use the principles that we talked about in all the particular classes, that precede this one, it's going to allow you to go and make plays based on being able to look at the news, kind of understanding what the situation is, and then being able to do the research necessary to do your due diligence and then to try to start deciding like what contracts you want. There are some things that are going to be omitted from this presentation. So let me give you a heads up what's going to be omitted. I'm not going to show going into a brokerage account and buying the options. That's something that you need to do on your own. And if it takes you going into your brokerage account and you sitting down and taking 2 hours and just looking at options change until you get familiar with options change, that may be the kind of work that you need to do. And the reason why we're not going to do that is because every brokerage account is different. Therefore, if you have a TD Ameritrade and I have an Ally Invest, it's not really going to be helpful to you for you to look at the examples of my brokerage account because the UI is different on every particular account. And when we say the UI, we mean the user interface, right? So what we're going to do is we're going to go again over the principles, the steps of the principles, but the actual detailed work that you're going to have to do on your own is something that you're going to have to be willing to do to become successful. Let's get into it. So what we have is we have this Rite Aid stock play that a member of my particular group was able to capitalize on. I think they did 256 profit off two contracts, and they did this on a 24-hour turnaround. So they bought the options on one morning and they sold them the next morning. And so they did it for a profit of around 256, and I believe that was off of two contracts. And one of the reasons why we were able to get an understanding of this play is just using the principles that we talked about in the class. So the first thing is that we did our reading. So over the weekend, I read this article about Rite Aid stock, about how it had tripled in pretty much over the course of a week. So we're going to kind of break down some of the key points, how this was able to jump out in front of us, and then what I kind of looked at to do my preliminary analysis, and then how I kind of stopped and did a deeper analysis. And this is kind of what we talked about in class 2, where once you really start to understand a company, it puts you in position to capitalize off these situations. So we're looking at the article, and we're going to send you the links to all of these particular pages so you can read the exact same article I'm reading and not just have to read it on the video. So we're talking about Rite Aid tripled over the course of a week, right? So Rite Aid had 180% on heavy trading volume. We're looking at that Rite Aid was $8 a share, jumped up to $22 a share. Now we're looking at this graph. It's showing from December 19th to December 26th that Rite Aid went from like 7.5 to 17.5. We see that Rite Aid has 2,400 pharmacies in 18 states. We know that their competitors are Walgreens and CVS. Okay. We know that the company has mostly been in a conversation for continued losses, high debt, executive turnover, failed mergers. Now, what is that an indication of? Bad management. We understand that they had an estimate of 10 cents earnings adjusted per share, but they did 5 billion in revenue. That was what they were forecasting. However, they did 54 cents a share on sales of 5.5 billion. So they exceeded the forecast. Now we look at another graph of their share price from 2017 to 2019. We're seeing a really rapid declining slope. And we also understand that looking at this particular paragraph, we see that there was a lot of short sellers that people believe closed their position that kind of accelerated this recent boom. We call that a short squeeze, and we can go into that later. So just by looking at this article, we understand that Rite Aid stock jumped up after earnings. They exceeded their forecast by a multiple of times 5. We understand that this pretty much is a badly managed company based on their share value. And so now we want to kind of try to understand how can we capitalize off this play. So what jumped out to me initially was that this particular rise in share value is not sustainable because it's a badly managed company. Now I want to start looking for more indicators that this is a badly managed company and that this particular rise is not sustainable. So now how do I do that? Well, the first thing I do is I go to yahoo.com, I go to their finance, right? So we go to Yahoo Finance, we type in Rite Aid. The first thing I look for was the historical history of their share price, just based on the chart. So we talked about before, let me get rid of these indicators. We talked about before that over the 2 years, it was a declining slope. So what I'm gonna do is I'm gonna go 5 years back. What am I looking at? I'm looking at a declining slope. So I'm looking at 175 being this high and then it continuing to go down. That's what I'm seeing. I'm also seeing over the 2 years, the same thing, a declining slope. So we go back to the 1 year, we see it declining, and then we see that bump up after earnings. Now, what I want you to do is look at from around January, February, March to when they hit that earnings. And what are you seeing? That the share price was pretty much in between 5 and let's say 12.50, right? But really probably in between 5 and just a little bit over 10. So between that particular date and that last earnings, the share price never really got above 11, maybe $12, and it kind of bottomed out at 5. So we know this is not a really highly valued company to the market. And then what do we also understand? That they put out earnings in between these times. So we need that every time they put out earnings, we didn't see the share price really jump up. We're going to go back to that later, but I want you to understand that. They put earnings out every 90 days. And what do we see? We saw from the first of the year, they putting out earnings. We're constantly seeing a decline in the share price, They're continuing to release earnings reports. The share price stays in between this range until they put out this last earnings and it jumped up. So I want you to understand that every time they reported earnings, we didn't see an increase in share price that was sustainable. We just kept seeing this particular share price keep falling down a mountain until it almost started to trade horizontal. Okay, that's the first thing. Then what I do is I go to statistics and I realize that this company has a float of around $51.74 million. We understand that the float is the amount of shares that are available on the market to be traded. But we're looking at the percentage of the float that's being shorted. It's around 26%. So around 30% of their float is being shorted out. So we understand that the market is bearish on this particular company. They really don't believe in its long-term potential, and they're willing to borrow against a particular stock to short it because they believe that the share price is going to continue to go down. That's what precipitated the short squeeze, and we're going to go into that. Now, I want you to also realize that it's not going to show you now, but at that particular time, volume on this stock was around 27 million, okay? However, the average volume was around 4 million. Now, I want you to understand what that means, and just based on what I've talked about so far is where I knew this was going to be a good situation, excuse me, to buy puts against. If volume was around 27 million, however, the average volume was around 4 million, what we have is a situation where a lot of people ran into this particular market to buy this stock, so it drove the volume up. However, that's not going to be sustainable. And once those particular buyers leave the particular market, what it's going to do is make the sellers have to start dropping the price to continue to drive sales. So this is another reason why I believe that their share price was going to go down, because of the volume being abnormal compared to what the average volume is. Then also when we looked at the how it was being shorted. So what it caused the short squeeze. The short squeeze was as they reported earnings, it created some demand on the shares. As the shares started to go up, the shorts had to cover. So as they had to cover and buy stock to cover, what did it do? It now increased more demand on the shares. So then more people came in and bought. Then what happened again? The shorts had to cover. So what you had was essentially like a feedback loop of people having to cover, right? Because the actual share price was going up, which now created more demand, which is why they had the $8 to $22 raise over pretty much the course of a week. So I want you to kind of understand, and you can go Google on your own short squeeze to try to get a maybe more thorough explanation of what a short squeeze is, because this is not really a class on how to teach about short squeezes, but it's something that you see a lot when you see this rapid rise in a share price, right? When the share price has historically been low, and you see a lot of people have shorted against that particular stock. So just based on these two principles, I knew that I could write puts on this. I was fairly confident that I could write puts on this, okay, against their share price, and I could figure out a way to be profitable. I just had to figure out my expiration date and what contract I wanted. However, I'm always a fan of doing more research because Rite Aid is not one of my core 3 to 5 companies. Therefore, I need to do more due diligence so I can make sure I kind of understand what's going on. So let's get into it. So another thing I do is I go to the investors page. So Rite Aid /investors, we talked about before, will give you the links. Well, why do you want to listen to the investors page? We want to understand how did they perform so well in this last quarter. And what we're looking for is to get an explanation from the CFO or somebody of that nature of how they perform so well Okay? And how did they perform so well? Therefore, we can try to understand, is this particular price or this particular share value sustainable? And so if we're listening to the earnings call and we don't believe what they're telling us, they don't sound confident, if they can't come up with explanations for situations, then you want to try to understand that, you know what, maybe they're putting just a lot of ketchup on that hot dog, but they really don't have anything. But their job as the CFO and the CEO and the director of marketing, right? Their job is to put a really good spin on any situation that goes place, because they have to try to keep shareholder confidence. Okay, so I'm a big fan of people listening to the actual earnings call. So this is the earnings call. Now, if you can't listen to an earnings call, I think you need to kind of question whether or not you really want to be an options trader, because this is an hour out of your life, right, that you're going to have to take to put yourself in a position to have the highest paying part-time job in the world. So if these things are obstacles to your progress, you maybe want to ask yourself, is this space really for you? And maybe really another space would be well suited to your talents, okay? Because it's an hour in which you can listen to and kind of understand what's going on in the company and put yourself in a position to make money. Okay, so I'm trying to get you to understand about some friction or some resistance you may have to doing these particular things. So we listen to the earnings call. Then we also can view the third quarter presentation. So they put together like a PowerPoint presentation in which like their balance sheet is going to be involved or be included. So what you want to do is you want to look at that and kind of try to understand, does this particular balance sheet, and we can go a little deeper into it, does this stand up or represent what they're talking about on the earnings call? And what you really need to do is listen to enough earnings calls and read enough balance sheets until you understand what's going on in business. And that's really what you need to do. You need to listen to enough earnings calls and read enough balance sheets till you kind of understand what's going on in that business. And so for the 3 to 5 companies you picked, I would take their last 3 earnings reports, I would listen to their earnings calls, and I would also read their balance sheets or read their 10Qs or read their presentations in which their balance sheet is going to be included. And anything that you don't understand on here, you can Google. You can Google amortization expense, and Google will explain to you what amortization expense means. Okay? You can Google LIFO credit charge, and Google will explain to you what it means. And you can start to kind of understand what are the key components to these balance statements or to these income statements, and how can I kind of understand what's going on in this particular company based on what these statements are. Now, another thing that you can do to get even deeper into it is you can go find their 8K. And their 8K is kind of like what they call unscheduled changes to a company. And I found that by going to investors' presentations or going to their SEC filings. So because this is a publicly owned company, they have to file everything. Internet's moving a little bit slow, but here we go. So we got the 8K, which popped up for a second. We got the 8K, and then we got the 10Q, right? So you want to read the 8K, which is going to be like unscheduled changes. And the 10Q we talked about before is they're going to release 3 10Qs, and then they're going to release an annual report with the 10Q included. So here is the 8K. You may want to read that because we understand that they have some balance sheets included in that. Or you can also go and read the 10Q, right? And we understand that there's also the balance sheet included in the 10Q. So from a fundamental analysis standpoint, which is what we do, these are very important. Reading the 8Q and the 10Q and understanding what is going on in this company. Okay, so this is the deeper research that I do to get a better understanding of Rite Aid, so I'm not just buying options on a company that I really don't understand. So based on me doing all this research, I felt like, okay, this is a situation in which I want to write puts against. But I say, okay, I can do even a little bit more research. So what I do is I now go to NASDAQ.com. So I go to Rite Aid / earnings report / NASDAQ. And what I'm looking for is their last 3 to 4 earnings reports. And so we already saw on the Yahoo chart, and you can see that if you go back to earlier parts of the video, every time they released earnings, we did not see a really rapid increase in the share price. So we're looking at them over the course of a year. Okay, so they did their first earnings on 4/11. We go to 4/11. This is when they put out earnings here, and we're seeing that the share price decline. And so what I do is I look at every earnings report when it was reported 626, and I go back and I find it on the graph. And I try to see, how did the market respond to that earnings report? Did it create a rapid increase in the share price? Or did it maybe bump up a little bit and then come back down? What was the range over the next 30 days? Did it kind of go up leading? So we saw that leading the earnings, it kind of went up. And then once it hit earnings, went up a little bit, came right back down. So what you want to do is go to NASDAQ, look at the data that reported, find the actual date, and then find that on the chart. And kind of try to determine what happened after the reported last earnings. And kind of do some, I wouldn't say necessarily technical analysis, but you kind of want to look at how the market responded to its earnings report. So now I did even that level of due diligence. So now what I'm trying to understand is that over the last 4 earnings, you didn't see a real spike in their share value. You didn't see a big run over to this particular company to invest, because they're really not a well-managed company. They don't have a really good, robust geographical imprint. And we understand that their competitors, Walgreens Boots Alliance and CVS, is kind of beating them over the head. So once again, we determined that we're going to write puts against their share price. So now what we have to do now is just try to figure out what expiration date do we want it on. Now, at this particular time I was researching this was a weekend. So I was looking for dates for that next week to next 2 weeks, because I believe that they had a run up over the course of a week. And once the volume left this particular market, it was going to drive that share price back down. So what I do on a preliminary standpoint through Yahoo is I just go to options and I start looking at dates. And I just want to see like what dates are available. Looking at dates, and we talked about before, what you want to look for is you want to look for open interest, okay? And if you want to do a really short-term play, right, on the day of the market, you look for volume. But what I do initially is I look for open interest and expiration date, because I felt like this share price was not going to last over the next 2 weeks. And I felt like it was going to be at 22. Over the next week, it was going to fall to maybe 15. Then it was going to fall to 12, but it was going to start to trade horizontal. And then over the next month, it was going to fall back down to the 10, because I felt like all the volume was going to come out of this market, which was going to cause the sellers to drop the price, which was now going to make the share price start to fall, just so they could try to move shares and keep the market going and keep liquidity in the market. So all I did was I went on Yahoo. I started looking at expiration dates that correlate with this particular situation. And if we look at the chart, let's go over a month, because this happened a few weeks ago. We see that they had that run up. We see that they had that run up, right? And then what do we see that consequently happened that next week? We see that it started to drop off. So you had the run up after earnings, 12, 26, 27, and then we see it started to fall. And it continued to fall, continued to fall, continued to fall, hit 13 again, and fell back down to 1204. So we start to see that the market, because what we really see is all the volume left the market. And once all the volume left the market, just like we thought, the sellers had to start dropping the share price to continue to move the stock, continue to create liquidity in the market. And then what did that cause? It caused the share price to fall. So this is what I did to kind of understand this play. And I said a woman that played this on that Monday, and I think she did puts at $18. And I believe she sold at 15. Okay? So she sold at 15 that next day. If her exit price was a little lower, she could have made even more money, but she got out when she saw her profit, which is also what we teach. You could have made money off this if you just would have understand and kind of follow the same play I followed. And I think I put this play in the group. I'm not 100% sure, but I know I posted the article in the group. Okay? So based on her having a lot of confidence in what I told her, she go ahead and also made this same play. Because this was a really easy setup, and I seen this setup again with another company that had a similar situation where they reported after earnings. They were a company that really wasn't managed that well. They reported after earnings, share price jumped up for maybe 2 weeks, and then 2 weeks after that, it fell pretty much right back to where it was at before it reported. And what we're eventually going to see is Rite Aid is going to fall back to the 767, which is pretty much where it was at before it started building up momentum for earnings. That's what we're going to see. It's going to linger for a while around this $12 to $10 mark, but eventually it's going to fall back to 750. Okay? And that's because Rite Aid is not a well-managed company and it really hasn't figured out how to really deal with its competitors. So this is the breakdown. So what you want to do is watch this video as many times as you need to kind of understand it. But it's just a way to make a decision. What I'm trying to get you to understand is that you need to have a decision-making process as opposed to following what other people are doing or just getting caught up in the hype. And because many of us have never been taught a really thorough decision-making process before in our life, this can be challenging to you to actually have steps that you need to go to make a decision. However, if you follow these particular principles, once you understand the fundamentals behind it, you can continue to iterate it to make it a little bit more fluid, to make it move faster for you. But what you need to do is have an actual decision-making process and understand how to make decisions for yourself in this market. And I'm very confident that is if you actually do the work involved in this, you can start to recognize these opportunities and be able to make the same plays for yourself and be able to have a similar profit to the young woman that follow my advice and follow my counsel on this and be able to profit from the situation. Get in, get out, maybe stay in a little bit longer based on, your particular forecast and your setup, and put yourself in the best situation to be successful. So this is a video version of the Capstone course. Wanted to do this because I know some people, I talk kind of fast. So when I'm doing this live, they may not can't follow. But now you have the video from an archive standpoint. You can watch it over and over again until you figure it out. So this is David W. Williams, also known as Diamond Dave. I'll talk to you later.